Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening of, Thursday. We're at the 7th. Yep, it is Pearl Harbor Day, so, I didn't say that in the other two updates. I did it this morning. Hats off to all our boys from that terrible time many, many years ago. But it's amazing how close we got with Japan after all that. Unbelievable. But also, first day of Hanukkah, so for those of you Jewish people out there, happy Hanukkah to you. All right, so tomorrow's going to be a happy or an unhappy day because we get the jobs report. Keep in the back of your mind, about 41,000 people came back to work that were from the Screen Actors Guild and the United Auto Workers strike. So that's going to shove up the number in theory. The guess is 180,000. The whisper number means people go, it's stronger or weaker. I'm hearing 156. That seems to be the whisper number. And, the lower the number, the more likely the Fed is really through with rates. I think they're through anyways, but through. And the shorter duration, that's what you're going to be betting on tomorrow. What's the duration before the first cuts? Let's assume you had a job number that came in tomorrow, 125,000. Just making this up. You would see the bonds and notes probably go bananas. Let's assume you get a jobs number that comes in 220,000. The first thing traders would do is, 41,000 of that is blah, blah, but it would still be 180,000 number. Got what I'm saying? No matter what the number is, the trade is going to try to put a bullish spin on it. Be ready for that because they're in a bull mentality. All right? I have been telling you that I think you're in a consolidation phase because you came out of November so strong, markets often like to consolidate. The strongest of all the indices is the Dow. And very shortly, it gets another buy. It's the only one that gets another buy in the month of December seasonally. So keep your eye on it. Obviously, traders want to buy the low valued in the market that hasn't participated in the small caps. But those that have been doing this all year have nothing to show for it, whereas the other indices have gone. And the problem with this market, it is made up of 7 stocks, the Magnificent Seven as the trade has labeled them. And if you take them away from the market, honestly, you don't have that big of a rally. And the problem is that's become a crowded trade. Crowded means it's so heavy, if something goes wrong and everybody dumps, the market gets into trouble right away. I am not saying that's going to happen. I'm just telling you what is going on. It's heavily concentrated, and that is the problem with the market. It's not through the whole marketplace. I wouldn't expect much out of the currencies tonight. In fact, I wouldn't expect much out of many things. Everybody's focus is going to be on one thing and one thing only. What's that jobs report going to show? Is it going to move the Fed closer? The market already, the outliers think it's March. Most people are centered on May or June as being the first rate cut from the U.S. And as I tell you, everybody could be thrown awry if you get a monsterly strong jobs report tomorrow. Just be careful. When we take a look at the mini weekly chart in the S&P, in the consolidation, you're down 0.33% for the week. I'm not surprised at all. And you can see how you're just going sideways. This can all blow up to the upside or downside tomorrow, depending on this report, very easily. Beware. That's the right words that you should have. When you look at the mini S&P index, the reality is it in itself is in a downtrend. You have in the short term, lower highs, lower lows. However, it's fully negated because you're over the 18-day average, which means the bias is up. When you have the trend down, which you have, when you have the bias up, which you have nothing. They counter each other completely. I told you I thought the Bollinger Bands were going to come screaming in on this market, and you're going into consolidation. Consolidation happens when this is occurring. You don't see that? It's happening right in front of you. Could you blow out of those numbers? Of course you could. Do I expect it? No, I don't. That's the first important thing. And you have an embedded reading that made its objective. get ready for this one. I was looking at it this morning going, uh-oh, here you are, you lose the embedded reading. If you've taken my course, and by the way, your stochastics won't look like mine. To my subscribers, I'd be happy to give you the formula. You got to go in and change inside, not the 5, 3, 14, or 18 numbers. You know what I'm saying if you're a student of this. Got to go inside the formula to make the change to get what I've done. But it's saying it should get to the 18-day average, the red number, before you get over these highs. Kaboom! Thank you. It reminds me of going to a carnival. I once did that where I took that sledgehammer and did it. I think I was in a sling for a week afterwards. I don't know how those guys were so strong. So the market came down here at 40. Didn't you ever feel foolish if you went to those, if you had a date or something? I did. I was always with a big, strong guy. He could do it, not me. I was the wimp. All right. When you take a look at the NASDAQ, just sort of hanging right here on the sideways, look at how you're narrowing in the band there. I mean, these markets are gearing in. This is what consolidation does, and eventually they break out. Could this report be the thing that breaks it out? It could. What did I tell you on the Dow? It's not trying to consolidate. It's pausing. It's got these Bollinger Bands. They're not even attempting to narrow in at this point in time. Not quite the case in the Russell. You can see they're starting to pull back in. Now, it's interesting. This Russell can be the surprise to the upside. Do you see the 18-day average? It's getting ready to attack the 100 and the 200. If you get a setup where it gets over both and prices can stay over all three, first thing, I have seen where you get the crossover and then the market immediately falls back under. But once it starts sticking there, and you don't need a long period of time, the story starts unfolding and all of a sudden traders go, wait, why am I not in that? Some people have mandatory rules that they have to do with that. So pay attention. Are we going to embed? Well, we haven't. So you got to wait and see if that's going to happen. You're just overbought. You're fully embedded, which means breaks are still being bought in the 10-year note and in the 5-year. So I am not surprised by these rallies. You've had a bullish crossover, and you can see you've gone up for the higher high. You had a bullish crossover in the 10. So they've both done what I thought they would do. Now in the dollar. When you come down and you challenge a 100-day average for the first time, normally, it's not every time, the norm, 70% of the time or more, that's going to be my guess, not a flip of a coin, you'll see it act as support. If it fails, I'll say it went through it like butter. It didn't even exist. You'll hear me say that, which is unusual. Then the market, if there's another moving average, it looks for it under it or a Bollinger Band to find the support. That is very typical. And remember, what you have to learn to do is take the name off the chart. As I'm recording my new course right now, I'm giving you charts in there where you have no values on the side. You don't know what market we're looking at. It blocked everything out. It's jet black. You can't see it. And the reason is you have to learn to trade the pattern, not what you think. When I tell you this is the dollar index, whether you understand that or not, the first thing that's going to happen is you have an opinion. Probably 30 years ago, I wrote a book, first printing, 5,000 copies were bought. I think Forbes or one of them bought it when we did it. I wrote it with another gentleman, Dr. Garfield, and we did an analysis of the CTAs that were running money through my book, Commodity Trading Advisors, not work for me, independents, the big ones, with questionnaires. And we found the differences in people. And one of it that stuck with me is a lot of these guys didn't want to know what they were looking at. They wanted the pattern. Interesting as can be, and that's definitely stuck with me. All right, but there's more things. All right, so higher lows, higher highs, and I'm never writing a book again. I enjoyed it. It was fun one time, and we did well. So market fighting its battle here at 103.56. Then if you take a look at the euro, higher high, lower low, look at this. This is called a vertical price break. It's like you pulled the plug out. You have a hot air balloon. It's been going up, and all of a sudden you pricked it, and zing, it just fell back to earth, right? Well, did we really change the game? Here's what I wanted to tell you on this. The market is now placing bets as to who goes first. Is it the United States, the leader, going to cut rates before the European Union, the ECB? That's what's going on. You may not believe me. I know that's going on. You've got Bill Ackman of Pershing coming out. It's March. You've got all the ECB leaders, all of them saying, no, it's not going to be this year. Yes, it could be 2024. We don't think we're going up in rates again. And we haven't heard dates, but you'll hear people coming out. Bill Ackman is the first one, but he's not in the lions, in the den. The den are the people between May and June. That's where the heavy betting is going on. Well, if the euro does it ahead of time, because now there's people saying maybe it'll be March, and they do it first, who gets the edge? Well, it probably starts going to the guy that cuts it first, because you'll say, they're taking what? They're taking the headwind off the market. Now, once rates start getting cut, they don't go back up. Banks that do that lose credibility. You don't want to see that in a central bank. Once they do it, you want them to finish the direction they go. That's why they wait too long. If they go first and they're too soon, the credibility's gone, then they come back. And in America, they get called before Congress and everything. They don't know what they're doing. There's calls to out the head of the chair of it. They've made blunders and they've screwed up American business. I've been through this. I've been at this. I've been a broker since '69. You think I haven't seen all this happen? I remember Paul Volcker. I remember him doing it, and I remember how they crucified him when he had to go back and make a change. And his lesson is on everybody. On everybody. I lived through all that. The British pound, back down to key support. Lost your momentum. So the uptrends that we had against the dollar ended. The downtrend the dollar was in has come back up, ended. Where are we? We're looking at jobs report, and next week, obviously, the Fed meeting's unimportant. You're going to say, what am I talking about? Folks, they're not raising rates unless tomorrow's number is absolutely insane. 300,000 jobs, something crazy out there, and a CPI number following it next week is absolutely crazy too. Next, I think the 13th, we have our FOMC meeting. The 14th is the European Central Bank. You're right at this crucial time right now in the markets. Bitcoin, I don't care what it does. I told people here that you can't think of it as a chart to buy on futures because you're overbought. I said, if you want to own it for the play of that they're going to make the ETF, you got to buy it in this zone right here. And this is when I was saying it, and I have all the tapes of my subscriber videos. And as it came up here, I finally said, now you're over the Bollinger Band 3 days. I had given them a zone of 42,000 to 45 is where I thought it could go using some price count work that I had. And boom. Come out? No, but you got to cut that position way down. You got to be ready that you can give back a chunk of money here, and what you give back is profit, not from where you bought. Got it? You're already banked part of that. So now we get to Brent versus WTI, and you're still in a problem. You can see that right there. You're running the lower Bollinger Band. You got the Gorilla Glue trade. The Gorilla Glue trade occurs when you hit the Bollinger Band and you just keep pushing on it lower and lower, which often results in an embedded reading, which feeds on itself and gets the prices even lower. I have counts that this market can go to the $60 mark in Brent. So nothing's taken me off that, and that would be here even worse because it trades at about a $3 discount. You can see the lower lows, lower highs. It's still acting absolutely terrible. You're down under everything in the heating oil market. You're not even bouncing. And here, natural gas was fascinating today. You had a draw for the week that is 3 times the norm. You would think you'd get a bounce. Does it look like it bounced to you? Didn't even bounce. Part of the problem is today we're 51 in Chicago, 55 tomorrow, 56 the day after. Then we're back to winter. Well, winter is 35 to 40. So yes, you're taking and you're using the gas, but you have so much in storage that unless you get a real cold blast that lasts and you're just burning that furnace, The 100,000 didn't do the job. I would have thought you'd get more of a bounce. You didn't. The embedded reading still worked. The traders are waiting to sell this market on the rallies. You know, it's down so much it gets a little scary to do it at those type of prices, but inevitably that's the right thing to do. Now, we're going to be writing about the jobs report as it comes out. So if you have our research, you're going to get it sent to your email, and it'll be in our charting software. It'll pop up immediately. Then we'll analyze it, and you'll get special reports galore on it tomorrow morning. So you might want to take a look at that. How you get all this is iraepstein.com. Go up to the free offers, sign up for the research. You can move your cursor up here. And I will be on tomorrow about 8:10 in the morning here. I'll be recording, and I'll review with you also what the initial reaction to it is. But I'll save for my written report and my subscriber videos what to do with it. I'm Ira. You have yourself a great evening. I'll see everybody in the morning.